All right. Welcome everyone to today's sessions that's presented by PU Prime. As you can see on the screen here, today we're going to talk about the training psychology and discipline. Okay, and well, we will just straight dive in. So this will be the contents that we are going to cover today. Okay, and as usual, before we start, I have to read out the risk disclaimer for today's events. All right. This webinar is for informational and educational purposes only. Nothing discussed today should be considered financial advice, investment recommendations, or an offer to trade any financial instrument. Trading CFD and other leverage product carries a high levels of risk and may not be suitable for all investors. Due to the nature of leverage, losses can exceed initial deposits, so it is important to fully understand the risks involved before engaging in trading. While we will discuss market analysis, trading, and trading strategies, these are purely for educational purposes and do not guarantee success. By participating in this webinar, you acknowledge that Pure Prime and I are not responsible for any trading decisions you make or any losses incurred as a result. Right, this is a risk disclaimer. So remember the topic that I select today. All right, so this is the rationale behind why I come up with this topic. Okay, because why most of the CFD traders lose money. Okay, it is not from me. Okay, not I just blindly come up with this statement, but it is proven and is revealed by brokers. Okay, more than actually is more than 90% of retail traders lose money. Okay, and then today's we're going to discuss what could went wrong early on when we do trade. Okay, maybe you guys can give me a quick hand, like how many of you guys here is like can make constant profit from your day one until today. Okay, any of you here like make more than 16% of a win rate? Then you can show me a hand. You can click on the raise hand button and it show me. Then I mean I can you can be my master guru in terms of CFD trading. Okay, because to be honest, I'm not really like a seasoned traders, right? I don't really always stay in the markets, but I will keep on watching the markets, and only I will take actions when I spotted something that is I would say I will have like 80 to 90% of confidence. Only I will jump into it and then I will click on the start button. But if you are the kind of traders that always stay in the markets and you trade daily every day, then you guys probably we can discuss some of the thing that maybe we make mistake, okay, along the way, and that could be the reasons why has been making more losses than profit. So I see Martin Swins say you make a tiny profit. So of course, ultimately, I hope that everyone here will make a satisfying profit in the future. And then hopefully today's sessions will help you uh, to avoid those mistakes that most of the traders made. And from there, and only we'll discuss like how we can win in the markets. Okay, so let's join the 5 to 10% who consistently profit from the markets. Okay, the keyword here is consistent. Okay, like Martin, not to say like I want to like curse you or what, because trading is like it's a lifelong journey. Okay, it's not that this month you make money, next month you make money. It means like you can tell people that you are a successful trader. No, okay, I have been like making money when the market is extremely good, and then I wipe off all my profit when the market is dead. But I still insist to trade every day. That was my past, and then now I also keep on learning. I go through YouTube. I learn from my friends, and then I join some forums. So I come up with this thoughts that I shouldn't trade every day. Okay, so this is the current principles that I hold. Okay, I hope that I just share some of my experience with you guys. All right, so let's dive in. Right. So the brain versus the market. So I guess every one of us here definitely can agree with me. Within our brain, okay, we always have these two system. Okay. First system is that we want to act fast. Okay, and then we sometimes will be emotion because we are human, all right? We are not robot. Or only you say you build a very good trading robots, you trade with AI, then they are emotionless. But we are human. When we make decisions, okay, we can't avoid that sometimes we will make very emotional decision. And then the emotion trading will lead to impulsive trading. Okay, that we throw away all the norm or the principles that we previously hold. Okay, but we want to make quick and fast trading decisions, and then most of the time, okay, it will lead us to making losses. Okay, and of course, fear and greed. We are all humans, all right? Everyone have fears. Everyone have greed. If you don't have greed, why are you trading now? Okay, because we just want to make more money out of our normal job. Or if you are a full-time trader, of course, the greed is the motivations for you to keep on trading in the market. Okay, someone maybe will just treat it as a game, okay, a very fun game. And also, but anyway, you just want to win, right? Win is also a kind of greed. Okay, and fear and greed center, all of this is categorized as system one. Okay, but the system two is the system that is actually encourage us to hold when we trade in the market. Okay, it requires you to make a slower but a more thorough decisions making. Okay, and logical. Keep on asking yourself why before you place any trade, before you click on the start button. Okay, logical rather than emotional. Okay, and then the third one is also extremely important. This is the discipline. No one no one single traders out there trading by down luck and trading with a very fast and emotional way, and then they can claim that they are successful. Okay, only those that are very disciplined. Okay, and I will tell you like how to do, and then I will at first discuss with you like what are the common mistake that most of the trader made, and then later on I will share with you my thought like what are the solutions that we can do to avoid those mistakes, and then can share with you what is mean by discipline. Okay, and then you can look at the bottom of the screen. In CFD trading, system one almost always win. Okay, unless you train it not to. Why? Because if you think of it out there, like across almost all the asset classes, only CFD markets are one of the fast I mean in terms of price actions, they are very fast, they are very volatile, and also they are very fluctuated. Okay, so in CFD markets, there's tons of trading opportunities. And then if you are greedy, okay, and then if you are emotional and impulsive, you will see everywhere there's chances. But remember this, every chances is also equal to risk. Greater the chance, greater the chance for you to profit. At the same time, it is also the greater risk. Okay, that is why sometimes we are conquered by system one. We want to be so pro that we can make fast decisions. But you can, okay, unless you're talking about like you have been trading in the markets for like 5 or 10 years, and then you already get used to all the market patterns, or this particular single asset class that you has been watching it and you has been trading on it every day, every hours. Then that could be your experience that allow you to make faster trading decisions. But for normal people, and out of all these asset classes available in the CFD markets, it most of the time requires us to adopt this system to thinking. Okay, the system to decisions making style. Okay, slow, logical, and discipline. Okay, this is the key. All right, now what are the some of the common mistakes that one trader hold and destroy their trading account? First one is loss aversions. Okay, so the scientists, the psychiatrists, they found out that people feel people feel more hurt when they lose money rather than they gain. Okay, imagine that yourself. Okay, imagine that when you when you drop your money, when you lose your money, or you just drop your wallet, you lose your wallet. Is it more painful than, or the happy that you gain when you got some good thing, when you go for a lucky draw, or when you just come across walk on the street, then you pick up a piece of note. Okay, which one you think is have the greater feeling? You feeling the loss, or you feel happy more? Okay, unless you are like very wealthy, you are so rich that you don't mind to lose your wallet and then you lose your money. Okay, but to me, honestly, I really feel the pain of losses more than I feel good when I make profit. Okay, so loss aversions. So why is loss aversions will lead you to destroying your trading account? Is that most of the time we're not disciplined, and then we tend to tune our stop loss, or not even stop loss. We will just let the position flow until our trading credits dried up, our trading capital dried out. Some traders are doing this kind of thing, but of course, I can assure you I'm not doing so. Every time when I click the start button for a position, I always will set my TP and stop loss. So this is a way that I do to avoid this loss aversions behavior. Okay, and then the next one is FOMO. So remember the system one. System one requires you to make fast, impulsive, and emotional trade. So FOMO definitely will be one of them. Okay, of course, sometimes we do understand, like in the past, okay, since last year, if you look at the gold prices, okay, if you look at BTC prices, okay, and then sometime maybe oil or Wall Street indexes, right? Sometimes it will really lead us to FOMO. And of course, I do jump into this trap before. I want to chase in because I know there's still rooms to grow. Okay, definitely this is not the ending price levels for the assets that I traded in. But yeah, what is the result? Because when you chase in, you already mess up your trading plan. Okay, because you're going to miss out all this win-lose ratio, and then when you chase in, sometimes you just really mess up this resistance and support, and then this you become so chaotic when you trade in this very formal sentiment. Okay, and also revenge trading. Okay, this is like when this also happened to me when I was much younger. Okay, when I like naively every day I was just thinking of win. Okay, I was thinking of making profit out from the markets, and then I definitely want to win back, regardless like how much I lose in the markets already. Okay, by today, by this single day, I definitely want to win it back. And then maybe some of you guys here learn about the martingale. Okay, martingale is mean like in the betting, if you lose $1, the next bet you put in $2, and then if you win, then you win back $2, right? And if you lose again this $2, you top up with $4. Okay, $4, you lose again, you top up with $8, and then you think that one day, if you really got this time right, you will win back all your losses. Okay, this martingale is not really going to last you long enough in this trading world. Okay, you might win, you might profit when your luck is there, but I can assure you, so many people talk about this martingale, and when I trade with a group of friends, okay, and sometimes it's really work, it really successfully allow you to revenge from the markets, but it's not going to last long. All right, and then like unless you have like a limitless of trading capitals, if you have a cap, definitely until one point you don't have enough enough trading capitals for you to top up further, to double up your bet in the next positions for you to win from this martingale trading strategy. Okay, and then the fourth one, overconfidence after a winning streak. Okay, you might be in a very good trend, and then you win with the one single direction. For example, you think that the dollars is going to to be weakened, right? Because Jerome Powell says something very, very dovish. Okay, and then you go in, you enter in all these major pairing. Okay, you buy long positions for GBP USD, for EUR USD, for AUD USD, for NZD USD, for example, and then you long, and then you short USD JPY. Right, and then all of a sudden, something like really happens. You're going to like wipe up all the profit if you are too if you are too confident after a winning streak, because we are human. We do get ego sometimes, right? We think we're half the great, but sometimes, yeah, this is really led us to a greater failure after a small win. Okay, that could be possible. I'm not sure like any of you out here has experienced this before. Okay, but definitely it happened to me. Okay, this is why I share this with you. When I thought of like what are the mistake that I really happens on me, and then I'm sharing this to you. Okay, and then the recency bias is not so much, and then not a lot of people here feeling that is that the today actions feels like it will last forever. Okay, it do happens sometime when again the example like BTC, Ethereum, and then maybe since the beginning of the year, when you look at Wall Street indexes, okay, when you look at Dow Jones, Nasdaq, they're so good. Nvidia are so good. Every day they're climbing. Okay, but every day, every trade, every single positions will be a new one. Okay, you have to plan your trade with a very rational and disciplined mind. Okay, you have to treat every single positions that you place is a single one. You have to get away from your previous trading. There's no relationship in between. Only that you can avoid some of the common mistake that a human will make when they trade in the markets. Okay, and then move on. Deadly psychological traps to avoid. Okay, this is, yeah, again, remember, I talk about the martingale thinking. Okay, you double down on loss, loser. Okay, when you lose like $100 for this position, for example, then the next one you double up your margin. Okay, like for example, when you trade on gold, you trade with 0.1 positions, and then when you make a losing trade, you top up with 0.2 positions, and then when you lose again, you top up with 0.4 positions, and then it goes on. Okay, so this is definitely something that you want to avoid. Okay, I rather you really sit down and review your trade, ask yourself why you start this trade. Okay, is that very disciplined? Is that very rational? You set your stop loss here, and then you got the wrong trade, you got the wrong directions, and then hit your stop loss, and then you just admit your loss. Okay, you just admit that you lose, and then you reveal what happened, what made you think that this goal will go up, but actually went down. Okay, and then closing the winners too early. I think most of the people out here not going to do that, but some, yes. Okay, when they're when they see the position turn green, and then they're getting so excited when they see this small amount of profit, they already like hand getting so itchy that you want to close the position. Some people really like this. And what is the even greater mistake is that when they feel they close these winning positions too early, then they chase in the gain, because they get not enough. They think that, oh, later the this asset class still continue to climb. It's so bullish, and then you don't want to miss out the whole trend, and then you try to jump in again. Then when you do that, you really mess up all your trading plan. Okay, you're not disciplined, and then you mess up all this win-lose ratio. You mess up with all this support and resistance. Okay, and then this will lead you to a greater losses. And what also a great you know a very not disciplined move is that you tune your TP. Okay, have you guys experienced that when you trade, and then when you see these positions go in your favor? okay, it goes your favorable directions, and then you see you are profiting, and you think that, oh, maybe I can make more profits when I tune up my TP. Okay, when the grid hits you, okay, when the grid hits in, and then you start to tune your TP. This is also a move that is not disciplined. Okay, you should avoid. When you start every single positions, you really have to sit down and come up with a very thorough trading plan, which including where is the entry point, where is the stop loss, and as well where is the TP. Okay, and you stick with it because you know that when you come up with this, you come up with a system to thinking way. Okay, which is the slow one, rational one, and a disciplined one. All right. And then trading without a plan. Yeah, I already said that. And but on hot tips. Okay. When I think this is more towards those that are newly into the markets, that novice trader. Okay. When how you learn from a trade is like you learn from your peers, right? You learn from your friend, or you learn online when you follow some of the forum, Telegram group. All right. You just listen to them and then you trade blindly. I hope that this kind of traders, hopefully one day you will start to ask yourself these questions. Why? Okay. When someone tell you, bro, BTC is definitely going to rebound here. Okay, let's go in and then enter a long positions and then TP at 100K. Sure. Okay. And please, before you click on the start button, ask yourself why. Why this guy is so sure about BTCs going up at this particular level, and then why he's so sure that BTC we're going to hit 100K. Ask yourself why every time when you before you start a position. Okay, and then over leverage, of course, this will be the huge challenge for everyone that is trading on a CFD market, because why we trading on a CFD market is because they have this leverage characteristic. Okay, because we don't have enough money, but with leverage, it allows us to make a greater profit. But of course, at the same time, it also come with a greater risk. Okay, so don't over leverage on every position. Please do your trading plan well, including on like the maximum margin you use per trade and the maximum losses or percentage based on your total capital per trade. Okay, so these are the key for you to stay successful in the long term. Okay, you don't want to be successful in just like 3 months, half a year, 1 year. You want to be successful for the next 10, 20, 30 years, right? Okay, third one, ignoring risk reward because it feels right. Okay, this is most of the time because FOMO hits. Okay, and then with the feeling, you just feel like, when I look at the chart straight in with the raw price analysis, raw price pattern analysis, that was straight. When I keep first glimpse on these charts, I already can tell. Sure, it's definitely going to go down, or sure, it's definitely going to rebound from here. Then you place a trade without any thorough TP stop loss or any thorough support line, resistance line to assist you to come up with the greater trading plan. Just that you feel good. Okay, please ask yourself why again. Ask why, what is the candlestick patterns look like? What are the, if you have the trading volume, okay, what timing is this? All right, and what is the rationale? What is the fundamental factor behind this rally? Okay, can you explain it? If you can, then yeah, go ahead. But if you can't, just because you feel good, because sometimes you are happy, you just come back from a date, let's for example, and then your girlfriend has been so good with you, you're so happy, or your boyfriend buy you flowers and then bring you to a very fancy restaurant, and you come back home, it feels so good. And when your mood is so good, and when you think that everything is going up, okay, and then it could be very emotional that you come back from work and then you go scolded by your boss, okay, and then when you commute, you have a very hectic way to commute, your train breakdown, okay, you stuck in a very severe traffic jam, for example, and then you feel a very very bad luck, you step on pool. Okay, and then when you go back home and you start trading, when you look at the charts and you see everything's going down. Okay, so we don't want to be emotional. All right. And yeah, follow up next, ignoring risk and reward. You know, yeah, when you chase in, when you FOMO, things got chaotic, then there's no more risk and reward. Please avoid that. Okay. And then yeah, trading to revolver losses the same day. Okay. So someone, I don't know, like some of the people out there really think that, I definitely want to win every day. I cannot allow myself to lose. Okay, I have to win. And then, this I'm gonna feel shame when I tell people I'm making losses yesterday. Okay, this is not me, and then this is definitely not you, because we want to make sure that over the time, our winning rate goes above 60%, 65%. I'm sure you by that, okay, by that result, you're going to beat at least 80% of the trader out there. If your win rate is above 60, you really, after 10 years, when you check back, when you count back, you have like 60%, 70% of a winning rate, then you really can become a full-time trader. You can be a guru already. Okay, so this is not that easy. Hope that we can achieve that one day. All right. And then next one is candlestick pattern. What is so important? Okay, I'm not, out there's tons of way to depict a chart. Okay, depict price actions. Okay, we got the Ranky, we got a line, we got dotted. Okay, but why candlestick is the most famous way to depict the price actions for all asset classes? Why? Have you guys asked yourself why? Okay, because it has four very, very important components in every candlestick. Okay, because candlesticks are pure human emotion frozen in time. If you're looking at 5-minute charts, so within that 5 minutes, what people thinking? Okay, if you're looking at the H1 charts, okay, within that 1 hour, what people think? Okay, so it's all reflected, it's all resulted in one single candlestick, and then you can group it with 5, 10, 20 candlestick, and then you come up with a conclusions what people are thinking now. Okay, what could be the next directions after you stares at the candlestick? All right, so bull one, why is it bull? Okay, because maybe I will just start with like the four key components, because every single candlestick has the open price, has the highest price, the lowest price, and also the closing price, right? Only these four, and it's more than enough for us to learn, right? So why this candlestick turn red? Okay, of course, out there, if you can tune your colors on MT4, MT5, you can tune the colors on trading views. Okay, but most of the time, we take the red color to symbolize the bearish candlestick, meaning the markets goes down. Okay, the price goes down. Why? It's because the closing price closed lower than the opening price. Okay, that is why the price go down. Okay, meaning this is in a bearish trend. It means that this is the bearish candlestick. Vice versa, when the opening price, when the closing price close higher than the open price, that means that the price is climbing, is going up, is appreciating, meaning that this is a bullish candlestick, and then it goes green. Okay, so what it is so important, and I will share this with you in the next slide. Okay, so if you pay attention enough in every charts, right, every single candlestick, they come with different pattern. Okay, have you ever asked yourself why? What this means by when the body is huge, is solid? What does it mean? And also when the body is so tiny, it's like almost like a cross. What does it mean? Okay, or when the tail, or people call it wick, is very short, what does it mean? And also a long tail, a very very long tail, and it often happens with the crypto markets. Okay, you often will see a very very long tail. What does it mean? Okay, so behind the logic, right, these are the four very useful psychological candlestick that hopefully it will help you in your upcoming trading. Okay, when you spotted this kind of the candlestick, maybe you can give yourself a second thoughts, like what the market is trying to tell, what is the logic or rationale behind the pattern of this candlestick. Okay, the first one is dodgy. Dodgy by all means is those that are referring to the patterns like a cross. Okay, whether or not it has a very long tail or short tail, but anything look like a cross is a dodgy. Okay, it means indecisive. All right. So the placing of the candlestick, where does it appear? It is also very important. Okay, why? If you found this kind of pattern, okay, this kind of candlestick at the top, at the peak, okay, like it maybe this candlestick appear at the 1 month peak of, let's say, Nvidia. What does it mean? It means that at first people thought it might continue to goes up, but suddenly it pulled down, and then it closed and opened at a very narrow range. It means that people are already start fighting. Okay, imagine that 100 people out there looking at the Nvidia share prices, and 90% of the people there believe that Nvidia deserve a higher price. Of course, it will be a very long, solid body bullish candlestick, right? Because everyone agree with that. But and also at the same time, what if 100 people out there, 90% of the people believe that this asset price not deserve to be at this high level? It should be go much lower. Then of course we are getting a very solid long body bearish candlestick, but this time it's like a cross. All right, it's a cross with a very tiny body and then with a tail, upper tail and a lower tail. Okay, what does it mean? It means that at this time round, people are indecisive. So this means that when you already enter the trade, okay, when you're already in a trade, that and then you have to take a second thought already. Is it we already come to the end of the trend? Okay, is the trend is going to end, and then I want to make a decision again. Okay, should I close my positions? Okay, should I tune? Okay, so this is up to you. Or maybe this is already the end of the uptrend, for example. Okay, at the peak you found this. Okay, before that it was like a long uptrend. Okay, and then you found this. Whether or not this is a chance for you to jump into a short positions, because after this candlestick, it is the initiative of a trend reversal. Okay, a trend reversal means it goes down. Okay, whether or not you can capture this bearish trend reversals, and then you start short positions. Okay, so this could be also another signal for you. That is up to you to think. Okay, this is also people look at it with the hammer and the shooting star candlestick pattern. Okay, it means that the exhaustions and rejections. Why? Okay, can you guys feel that this inverted hammer, okay, this symbolize a pattern of a hammer, right? Means that there's a conflict in price. Remember, I shared with you, if everyone agree with a single direction, it will be resulted a full body candlestick. But when there is a fight, okay, when there's a fight, often will resulted a long tail. Okay, means that not everyone is agree with the price. It happens to goes to this way, but then it go down. Okay, and it's also a key that where this candlestick appear, whether or not it appears at the bottom, okay, at the support line, or it appears at a resistance line on the peak. Okay, at the bottom is the inverted hammer, and then on the peak is the shooting star. Okay, it means that there's the chance for a trend reversal. So this kind of candlestick pattern is you guys can keep an eye on it, and then try to find it, and it tells you something. All right. Okay, let's move on with the engulfing. This requires a two candlestick. Okay, previously we talked about just single candlestick. So this kind of pattern requires two candlestick together. Okay, and also again, take notes that if it happens at near your support and resistance, it gives you extra meaning. Why? When it happens, okay, when it happens at the resistance, okay, and then following after this, when it hits your resistance, it showed this bearish engulfing. It means that the selling pressure, the downside pressure, is greater than the previous bullish candlestick. It means that now the selling pressure is much higher already. People start to think to sell this asset. Okay, so up next, you believe that moving on, it will be a further selling, okay, a panic selling, and it will continue to push and then suppress the price as the excess asset price. Okay, and vice versa, if this kind of candlestick pattern happens at the support line. Okay, it means that previously it has been selling bearish candlestick, selling until here, and then suddenly there's a buying power, buying pressure. So it means more people believe that here already comes to the lowest price ever for this asset, and then suddenly people are start to buying, and it covers, engulf the previous short bearish candlestick. It means that coming up next, we believe that people will start buying, and then up here people will start to chase in, and then maybe four more sentiments hits, and then we believe that it will continue to goes up. Okay, so this is the meaning behind the bearish engulfing and also the bullish engulfing. Okay, these two. Okay, and then this will be a bit like more common, but just give you a signal to be aware. It's been the pin bar. Okay, pin bar sometimes, maybe it happens at the very flat, okay, a very flat sideways pattern, and then suddenly come with the pin bar. Okay, most of the time because it is because of the market maker. Market maker try to fake in and fake out people. Okay, have you experienced that when like there's a sideways and then you believe that if it's breakout, then it means it's a bullish breakout, and then suddenly it goes up and then close back lower. All right, what does it tell you? Okay, it tells you that it is a false breakup, and then perhaps there's a chance that the market maker try to fool you, and then will go to the opposite direction. Okay, it could be also for a bullish pin bar. Okay, something like this, right? It's like press all the way down, but people start to buy, and then it close higher. Okay, this means a bullish pin bar. Okay, people are not agree that the price should close here, but they agree that the price should close here. So it push all the way up, and then this is the bullish pin bar. Okay, so you have to believe that maybe sometime when the trend goes up and then goes sideways, and then here come this pin bar, and you can believe that yes, the buying pressure is still there. Okay, people are still buying, and then you can believe that the trend will continue. Okay, this is the meaning behind a bullish pin bar, right? Now, next. So this is the discipline framework, because previously I've been telling like what are the common mistakes that a human will make, what are the common mistakes that a trader will make in a CFD, and this will be maybe the solutions that prevent you from making more losses. Okay, the first one definitely is written down the training plan, which I already mentioned it multiple times when I start this webinar. So what is a trading plan mean? Okay, the trading plan means when you first deposit, all right, when you first deposit, let's say for example 1,000. Okay, so you have to come up with your own principle. Okay, meaning to say you have to tell yourself what are the maximum margins that you allow yourself to start a position. Okay, maybe if you deposit like 1,000, then you have to come up with this principle, with these rules, that every positions that I start shouldn't go beyond $50 or $100, for example. Okay, so you have to stick with your principle. And then when you do your risk management, okay, stop loss and TP, your ratio has to be greater than 2. Okay, and also in terms of losses, how many percent you allow you to lose. Okay, whether or not this is 1%, 0.5%, or 2% out of your total trading capital. And please stick with it. Okay, please, after this session, if you don't have one, if you don't have your trading principle, come up with one. Okay, and then you ask yourself what kind of trading strategies you use when you look at this chart, and then when you come up with your technical analysis. Okay, and which is including that you think that this is like a scalping strategy. Okay, news trading, day trading, swing trading. Okay, when you want to trade on like non-farm payroll, for example. Okay, you have the great feeling. Okay, when you want to trade with the Fed interest rate decisions, trade on the news. then perhaps it will be like a scalping strategy. Okay, you shouldn't hold these positions for longer than 10 minutes, for example. So you have to come up with all this principle and stick with it. Okay, especially the margin, the stop, the stop loss, like how many percent you allow you to lose. Okay, these are the very key principle to hold, which is you have to definitely written down in your training plan. Okay, which is including the predefined risk per trade. Okay, how many percent you allow you yourself to trade? Is the stop loss levels in line with your principle? Okay, if you draw this support line, it's way lower than your initial trading principle. Okay, and then the win-lose ratio is not greater than 2. Okay, meaning to say, if you allow you yourself to lose 100 pips, is the TP, okay, your returns greater than 200 pips. Okay, you only place your trade when something like this. This is your strategy. This is your principle. Please tell yourself this. Okay, and then please come up with your daily max loss limit. Okay, this is to those that trade every day. Okay, I'm not trade every day. Maybe I will set like weekly max loss limit. If I lose more than 500, I will stop today. I will not place any more trade because I want to calm myself down. I want to be more rational, and then I'll start better tomorrow. Okay, and then weekly also. Okay, because I don't trade every day, and then maybe I hold a position sometime longer than 1 day. So I have to have like a weekly max loss limit. Okay, if I see myself lose more than 1,000, then I will stop for the rest of the week, and I will come back stronger the following week. So this is my principle that I share with you. I hope that you will come up with one after these sessions. Okay, and then most importantly, mandatory trade review after the position close. Okay, especially those that are losing one. And of course, you do great if you do it on every single trade. Okay, ask yourself why you win. Okay, why you profit from this trade. Okay, like what are the when you do it, you got it right fundamentally. Okay, because of the news. Okay, or because the candlestick is too easy to follow, the trend is too easy to follow. And then people love to trade in a less volatile markets. You tend to trade in the sideways markets. Okay, so when you follow your trading plan, when you are disciplined enough, yeah, you can write it down, you can praise yourself. But when you're doing stupid trade, okay, and then you resulted a great loss, okay, please review yourself. Why? Was it because of emotional trade? And if it's not, why you go with the wrong direction? Okay, so keep asking yourself. I believe when you are very hardworking in doing your homework, one day definitely you will be so successful in trading. Okay, again, we don't want to be successful for just 3 months, for half year, for 1 year. We want to be successful for 10 years, 20 years, 30 years until the day we retire, and then with ample amount of money. And when you're old, you can still trade. Okay, just that when your mind is clear, when your finger is functioning, okay, you can click. Yeah, you can keep on trading until the day you close your two eyes, right? Yeah. And then, yeah, final remark, written down all your trading plan before you start the click button. Okay, meaning to say you place your trade. Okay, market doesn't care about your IQ. It's only cares about your emotional control. If you really can control your emotion well, you're already beating 90% of the trader out there, because it consists of money. Okay, it definitely going to drive us emotional sometime. But keep asking yourself to calm down. Keep asking yourself to be disciplined. Keep asking yourself to be rational. Okay, because emotional leads you to greater losses. Okay, nothing comes good with emotion. Okay, in everything, in your job, in your daily life. Okay, especially in trading, it will amplify your emotion, right? And then master your mind, master the CFD markets. If you don't do so, it is so hard to master in the CFD markets, right? And then the risk management, TP, and stop loss. All right, stick with it. Okay, definitely you have to place the order at every single position you place. Okay, here come to the end of today's sessions. Okay, I will take some of the questions. Yeah, if you don't have, then we will end today's sessions. Right. As some ask doji and hammer candlestick are a good sign if you are looking at the correct time frame. All right. So if you're talking about time frame, right? Okay, this is what I do. Okay, when I looking for a trend, I will always look at a greater time frame, like the daily to H4. Okay, this is what I do. When I already define the trend, whether or not this is the uptrend or downtrend, when I find my entry point, I will look at H1. And just because I'm not a scalper, I don't really fast in fast out, so that and for me I think 1 minute, 5 minutes, 15 minutes, there's a lot of noise. Okay, when you talk about the dodgy candlestick patterns, hammer candlestick patterns, you will find it a lot with a small time frame. Okay, but it will be much more useful if you use a longer time frame to justify, because more people, more trader participated in this one single time frame. Okay, of course that will be more useful, right? So like Visha asked, does color matters or dodgy? If you're talking about the dodgy, right? The colors not really matters. Why? Is because the body is so narrow, so small, but the tail is very long. It means that people is indecisive for the upper price and the lower price. Okay, so there's a fight. There's a fight between the selling pressure and the buying pressure. So often the body will be extremely narrow. So it means that the colors, it doesn't really matter. Okay, so I hope that I answer your question, Lavisha. Any more question, guys? All right, thank you. Welcome. Thank you, thank you. So yeah, thank you for everyone to come to join these sessions. And then lastly, I hope that you have a very enjoyable journey to trade with PU Prem. And yeah, next week we'll also have another sessions. And then in that sessions, I will just purely talk about markets and then share with you my trading plan with some of the famous or popular asset classes. Okay. Hope that I'll see you guys in the next one. And once again, thanks that you support a Pure Prime. Right. Bye bye.